Hey guys, Freaky Finance here. Last week we looked at banks and kind of what I'm looking forward to in 2024 with the potential sell-off on a credit provision. And today we're going to go into copper, so a little bit different, but the theme is I'm trying to think of things that could get cheaper in 2024, and then I can pull up these videos and be like, all right, I'm ready to buy. Ivanhoe is one I kind of hope fits in that bucket. Now, I already own this one. I've done a couple of copper videos, so I think the basics you could probably check out prior ones. This is the first time I did Ivanhoe, but I'm going to try to take it very basic and just really supply and demand and why I like Ivanhoe and how I kind of treat copper and how I view it in my portfolio. One of the cool things with Ivanhoe is that the key mine, the mine that I'm going to focus on today, is in the Democratic Republic of Congo, so kind of like right in the heart of Africa. And that's important because a lot of the other reasons why Ivanhoe by itself would never be that big of a position for me, even though I believe in it, is because it has a key mine risk. But one of the things I like about this one is that it doesn't have similar geographic risks that I already have in other places. Like almost every larger copper miner has at least one copper mine in Chile or Peru, right? This kind of avoids that, so I can just have a specific area and a specific key risk that I want. Ultimately, I've decided that accordingly because if the mine goes down for whatever reason, it's going to have a material impact on the stock and the share price, which could lead to a better opportunity, right? So that's kind of how I treat this one. It's kind of like in a collection of what I already own in copper. But it's something special with this mine in that it's one of the best mines, I think, to ride this eventual supply deficit that we'll be in. Now, we'll go into the, kind of like the timing and what I'm thinking. And what I'm doing in the video now is to try to hopefully see a pullback in 24. We haven't really seen much of a pullback in copper. People keep buying it. The price isn't really falling down, even though the economy has been relatively poor around the world anyway, specifically China growth and stuff like that. Anyway, let's jump into it. We'll start a little bit bigger, work our way down. One of the things that's unique about copper, relative to say gold miners that we've done before on the channel, you basically have quite a long time from your discovery to when you're actually producing, and the mines themselves also last a very long time. So what I mean by that is you discover something, you finally get the permitting, you finally start production. It takes a very long time to do that. And that mine's going to be there for a very long time producing. So it's kind of like you need to really, when you put cash to work for copper as an actual business, you need to be, I'd say, fairly and very sure about the long-term economics of what you're doing. So I just wanted to point that out before we jump into it. One of the things, like every other commodity, is that the price signal will dictate the supply of the next cycle. So what I mean by that, you can see copper between 1980 and 2000 was flat to down almost, right? There's a little period here where it's up, but really range bound between 50 cents and $1.50. And then all of a sudden, this is kind of the China trade with copper, super cycle, 50 cents up to where it is now, really, so $3.50. And if we fast forward again 20 years almost, or 15 years, you're at $3.73. So same price. Now, ultimately right now we have a lot more forward outlook on demand for copper, and people are aware of this with EVs and green energy, transitional energy like wind and solar. And that is the bull case for the future, right? So at some point demand will pick up again, but right now we're still getting the same price that we had back here. And one of the reasons why the price shot up like this and what that meant was that supply, this is basically what you call a price signal to producers to be like, oh my god, all of a sudden copper just went from 50 cents to $3.50, right? 7 times. So now a lot more mines were economically viable, and that put a lot of capex to work, and that's basically what you've been chewing on ever since. And that's how commodities work. You get the price signal, and then you'll get the supply to chase it. Now, we haven't had a price signal for quite some time, and to make things more interesting, we've actually had I would view it as negative outlook on new mines, partially because of COVID and partially because of the nationalistic culture that we're currently in. And I'll try to talk about this briefly with some examples to back it up. Specifically, I'm going to focus, because so much of the current copper production is in Chile and Peru, it makes sense to focus on the nationalistic policies of Chile and Peru. So here you can see, this is just something I picked up on Reuters, May 2023. But basically, with this legislation, we can seek to avoid what happened many times in our country's natural riches. They were exploited, they disappeared, which left little for the country and its future development. Now, this sentence you could plug for any single country in the world over the last 50 years. They're all basically saying the same thing, whether it's true or not. That's probably partially true. Basically, they're getting elected on this. Basically, push out the foreigners. We want to have an invested interest, etc., etc. And now one of the things the companies are doing are trying to align both the local government and the communities with the miner of that area. In this case, it would be Ivanhoe with the Dominican Republic, with the DRC. And these policy changes basically tax. So who gets what when, whether it's a royalty rider or just a different tax based on how big you are or at what percent they get, basically. And basically, all the countries are demanding they get more. And so what that means for the price of copper, or just mining in general, is that you're less likely to put cash to work in that country if they're going to change the rules on you. Like I said, you're putting capital in. Sometimes these can take 20 years to fully build, or get from discovery to actual action. And even then you have to ramp up. So it makes it so you need to be damn sure that you have a margin of safety on this, and what the tax is going to be 20 years from now almost. And you have no clue, right? No one does. So you kind of, you have to make sure that price signal is enough to cover that risk. And not only that, the higher the tax the T is, just in general, for any like NPV calculation or any return to capital, the higher the T is, the higher the price needs to be to cover it. And so basically, any time you see a nationalistic policy change, basically you know that's going to support the price of copper over time. Now, it could hurt the specific companies that are already in there. So what you do is you try to find ones that aren't, and ones that are already more aligned with the government, or have contracts with the government. Now, a lot of them are already doing that. That's because this theme has been ongoing for some time now. And that's one of the reasons why I like Ivanhoe, is because it has its own thing. So I know, okay, the Dominican's going to be, or sorry, if the Congo is going to be bad, then I know there's other places I can go. And I also know the reason why the share price would be going down. And I can decide whether I want to take a swing at it even more. But the thing is, I'm in control of where I allocate my resources to the capital exposure that I want. And Ivanhoe's a nice way to do that. Anyway, here's the demand outlook for certain. This is kind of like the bullish part on demand. But the thing is, I don't really need demand to pick up that much, just because I know supply is there hasn't been, shouldn't talk about supply so quickly, but there hasn't been a real discovery of copper with real grade for quite some time to offset what's likely going to be a continued dwindling of grade in the back half of this decade. So you have that into this, which is the green energy push. And whether you agree with it or not, it's going to happen, and I just hope that it's more reliable than what it currently is. And I'm sure we will get there at some point, but again, it's that balance of transitioning. And that's why I have a decent amount of exposure to LNG. I've kind of talked about this a few times, because I view that as the easier winner as we shift and phase out coal, which is by far the worst for the environment. Anyway, so here is just that, and you can kind of see just the growth rates, 8.2% year over year per annum. And that's per year up to 2035. That's from S&P Global. So anyway, you have a decent demand case, obviously, for copper, which is most people, when they look at a copper video, would already be aware of. But this is what kind of gets me excited. And why I want to do the video now in 2024 is because you still have a decent production cadence. So you have a decent amount of supply coming online, which should put negative pressure actually outweighing the supply function in 2024, right? So I'm kind of hoping this is the last chance that I get of copper coming back down, and then I can pounce more aggressively on these copper names. Now, it hasn't happened. I've done I even re-listened to my copper videos, and like me, and I've been waiting for 2 years now. I really hasn't gotten dirt cheap since the COVID panic, where I was able to pick up Freeport. But I'm hoping for that again, and maybe we won't get it, so that's why I already own it, right? But I'm hoping for that last pullback here, where we get the supply pickup, enough mines come online, that it overshadows this. It kind of clears up the days on hand inventory, which is very low right now. And then you get this easy, smooth sailing between 2025 and 2035, right? Like a decade of just, and the thing is, this can't mean revert quick enough unless, I shouldn't say that, I don't think it will, just because there's not enough grade, like new mines coming online in this time period between 2026 and 2030. And now it's early 2024, so it's only 2 years away. So that's starting to get exciting. So where exactly is the key mine in my mind? Like I said, it's in the heart, just north of Zambia, in the Democratic Republic of Congo. I was just doing this because they have a new train that I was just looking at. But anyway, they're kind of in the heart, so they can export kind of anywhere to the main users, whether that's China, Latin America, or anywhere that's high use of copper or building out certain things at certain times. One of the things, it always sucks because we're buying right now when the production, like they haven't really missed a beat for a pullback, because I like to buy miners when they miss, right? And there's like, obviously I'm expecting them to not miss again in the future, but that's usually when you can buy. So this video timing is more to like take advantage of a pullback in the future. But anyway, you can see this nice like record quarterly production. I did want to do this video because we know the production in Q4 was weaker because I had energy issues in the middle of the jungle. But the key slide, if I had to pick one slide for this investment, would be this one. It's just the production cadence going into this back half of this decade. So right now you have a nice cadence, 2024, 2025, right? You got phase 3, Q4, shooting up, and then again you have a nice shoot up right around 2030, which is when you have that pretty big gap here, right? So you get a nice production uptick at a time when your commodity is likely to be scarce. And so that's what I like. And it also has a nice smooth cadence up, so it's gonna, even if I'm early in the investment, I'm still gonna get production going up, which should help the cost curve in the interim. At the same time, you have very high grades, especially for a new mine. So this is like, if I had to freeze frame this is like the special one, right? Because you could basically get this huge production profile for the years that are likely to be the most scarce. And it takes time for the price signal to work. So if the price shoots up, they're going to make a lot of money for a decent amount of time before, again, enough people chase the price of copper and put enough cash to work to find and explore new copper sites. And the cycle resets again at a new higher base, just like between 1980 and 2000 to 2000 now, right? Or 2008 till now. So that's kind of how I view it. Like, it takes years of higher prices at the time when they're basically printing money because their production is just so on point, while their grades are so strong. So that's really the crux of the investment, and why I'm excited about it. It's really just a commodity play, picking up production into a scarce point in time, or what I project to be a scarcer point in time. In terms of the key risk, again, that's going to be the actual government, Congo. They do have quite a bit, like 97% local employment. It's pretty strong. They do have the government owning 20% of the mine, so that's also a good way to hedge it. So they do have quite a bit going on in the community that should hedge the key nationalistic risk. But you never know that, right? I've seen this before, where they basically trick foreign companies to go in, they make the mine, start making money, then they start asking for more, or someone, maybe not trick, but maybe someone else gets elected in, and then they demand more, right? Probably a better way to word it. So anyway, here's the step function of production. So this is why I love production cadences that are favorable. So this is even with copper that's basically been flat or even down for the last year. You can just see the production cadences going up and to the right and generating meaningful amounts of quarterly EBITDA. Now we are going to comp this at a time when the production's actually not that strong in this quarter, because I said they had power issues in Q4. I'm kind of hoping I get a buy in there, but it's not, like, it's still 30% more expensive than when I bought it. Now the stock is getting de-risked as these production numbers are coming in. Like, the business is materially better than it was before. But that's kind of how I'm thinking about it in the short run. And you can see this relative to other mines, that it is, in terms of grade and its size, it's definitely up there. It's if the stock price wasn't already worth so much, it would definitely be an acquisition target for any big miner, diversified miner that wanted more copper. Like if it ever got cheap, this would be the mine that's the gem. We did talk about Grasberg before when we did Freeport. That's the only one I talked about here. And here's just a fun one. It's going to be a shorter video, but here's just the railway that's being built. So one of the things we've seen now, because, not necessarily because, but we've seen a more recessionary activity in Chile and Peru after they've made such changes to their tax code, and that's because businesses won't invest in your business or in your area when the tax rate is going up or changing, just the uncertainty factor. And so we see the B and underneath the investment for when your GDP equals Y equals C plus I plus G plus EX minus IM. The I part anyway has a subsection for business investment, and it's basically, I mean, if you're going to be hostile to business investments, they're not going to invest in you. So what we're seeing now, though, the flip side of that is when you are a good partner, all of a sudden you get trains built. And this also not only helps the local economy, but it also will help getting copper to market, right? To the end use. So anyway, I just thought this was worth bringing up. It's another way to lower the cost curve. That comes online in Q4 2023. So now, we're past now. And here's the cost curve going down. Again, this usually happens as production picks up, ultimately. Depends on the grade. But you can see it's improving. But yeah, this is just a general rule of thumb. If everything else is constant and your production picks up, you're likely to see better scale on your cash cost. So those are bringing up. And in terms of the investment, again, it's more long-term than what it's currently priced in. And if you were to buy it, what it's currently doing, probably wouldn't. The market's also ultimately not naive. It's also what I'm thinking. So that's one of the reasons why I'm kind of waiting for a pullback on it or some overreaction to some type of mishap. But so far it hasn't happened for the mine. It's been relatively well run. You can see the operating income is already going up. That's again a step of the production function that we've saw. So anyway, I expect that to continue and ultimately accelerate whenever this happens, when the supply of copper can no longer meet the demand function. When the supply just drops off, the demand function just keeps rising. And whether that's 2026, 2030, 25, I don't know. I'm kind of hoping that the rate here, and this is 2024, is when you get an actual too much supply coming online temporarily, and that allows me to buy right on the cusp of this. That would kind of be the dream, but that might be too good to be true. So anyway, I thought I'd do the video. It's kind of what I'm thinking. It's the same thing I've been thinking for over 2 years now. But this could be a decent time, hopefully. But you never know, right? Because it's going to react to the cost of copper in the short run. But that's kind of how I'm thinking. And Ivanhoe is probably one of the cooler mines in that it has such a strong production cadence right into a scarcity cycle. All right, have a great rest of your weekend.